This is the first quarter of 2015 market update for Southeast Michigan. It's amazing that the first quarter is already over. And what we've seen so far this year is sort of what we expected. Inventories are up across most all market areas for Wayne, Oakland, Macomb, Livingston counties. But sales are up as well. And we expected sales to be up because last year we had such a tough winter. Now it wasn't easy this winter as well, but last winter it was significantly more. And in fact, a lot of sellers actually held back putting their homes on the market last winter because it was just so much snow and it was difficult to do that. So we did get a rush of sales, particularly in March of this year compared to last. We also got a rush of new listings coming on the market. We expected both of those things to happen. We'll really be able to figure out where the market is in terms of activity and buyer demand probably through June or even to July, once we can factor sort of apples to apples comparison to last year, because that pent-up demand last year was released in June and July, so we had some really good months last year in June and July. Overall, if you break the market down into price ranges, the under $250,000 market again has followed with the same trends it has for the last couple of years. It's very tight inventory. In fact, in that price range, inventories have actually gone down. Values have jumped up quite a bit. We expect values to jump up even more this spring. In fact, overall values, if you did an average values, we expect to rise this year maybe in the 4 to 6% range, but probably under the $250,000 price range, it'll be closer to 8 to 10%. And that's not every property, but certainly those properties that are priced right and have got the right condition, when they come on the market this spring, they'll be coming on the market with multiple offers and selling in days as opposed to weeks. Just what we saw last spring, we'll see again this spring in the under 250 market. In the 250 to 500,000, that mid-range market, probably see much the same thing. Although, whereas last year we might have had a really great property that hits the market that might have 3 or 4 offers last spring, this spring it might have 2 or 3, but still expect for those right properties multiple offers and some real strong activity. Inventories are up in that price segment, so there are more things to choose from. So there's also, from the seller standpoint, more competition. So again, we don't expect prices to rise quite as fast because of that. And we expect sellers should settle their expectations a little bit compared to last year. Still better than we've seen for a number of years. It's still a very strong market, but settled a little bit. In the over $500,000 market, which is the market that recovered first in the metro area, so it's also settled first. Inventories are up probably even more in that price range, although sales really took off proportionately in that price range the first quarter, particularly in March, for new contracts written as opposed to closed contracts. But we still expect that market to be the most normal through this year. So price range, price values, home values will probably rise 4 to 6%. In fact, in the highest end of the market, maybe 800,000 or $1 million and above, you might even see values actually kind of flat this year because they got really active last spring with that rush of activity, and values in the $500,000 plus market range across the metro area sort of got ahead of themselves. So this spring we might see a bit of a correction, so values may not rise as much. Still a strong market, still good activity, but for that price range, sellers can expect showing activity per week as opposed to per day, and offers coming in per month versus per week. So it's a little selling, and that's historically the way the market has been across all price ranges, but we'll see that sort of settling into a balanced market for the upper end this spring. But overall, a very strong first quarter. We expect momentum going into this, the second quarter to be very strong as well, and we think the net effect this first quarter, much of that big jump was just better weather this year versus last. But we expect this quarter coming up, second quarter, to be equal, maybe slightly behind last quarter because we had that weather effect last second quarter. But still, the net result is probably ahead. We're still optimistic that we'll be slightly ahead this year versus last in buyer demand and sales. So that's it. Thanks.